Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to Discovery Watch, John.
Jim, glad to be back.
John, Highway 50 has started a do-or-die drill program on the Monroe project in BC. Why, after 30 years of stalking Sullivan 2 without success, do the Leask brothers think they have set up a sniper kill shot?
Well, Jim, if you look at the market, I think John and Gordon Leask are the only people who think they have an elephant in their sights that they're going to nail over the next couple of weeks. They have been obsessing about the Sullivan 2 hunt since the 80s. In fact, even in the late 70s, when John Leask was working as a student for Cominco, they became fascinated with the Sullivan 1 deposit. And that was found around 1900. It does outcrop. It was a little bit open pit, but mainly it was underground mine until 2001. They extracted 149 million tons of 6.5% lead, 5.5% zinc, and 67 grams silver, just about 2 ounce silver per ton over that long period. The rock value today is $304 US per ton. That was $45 billion worth of very profitable metal that was hauled out of that deposit. It's in southeastern British Columbia, and it's a SEDEX deposit, which is formed in these sedimentary basins when they're underwater, and a smoker system comes along and spews these metal-rich fluids into the seawater, and then they gradually precipitate out, forming almost a pie-like deposit. And this thing's about 2,500 meters by 1,500 meters dimensions and averages about 21 meters thick. So this is because these things occur in clusters, everybody has been looking for Sullivan 2 almost since right from the beginning. And there's only been a couple of tiny versions very close to Sullivan 1 that have been found, Stemwinder and North Star, and they weren't anything significant. In the 60s, Cominco looked at the area of Monroe, which is about 35 kilometers south of the Sullivan deposit. And this is also a graben-type location where a segment of the basin was dropped down, and the so-called faults along the side are believed to have been long-lived and are the source through which the fluids come and eventually create these smoker systems. And exploration started in the 60s in the Monroe Graben. In the early 80s, a company called Kokanee ended up making the Vine discovery. And then a little later, at the end of the 80s, there was a huge promotion involving a junior called Barcor Resources and Consolidated Ramrod when they were chasing the Fours system, which turned out to be a vent near to the west of Monroe Lake, and it had a smallish deposit of lead-zinc mineralization, but it was not the type of long-lived, multi-phase system that Sullivan itself was. And the Leask brothers themselves, through one of their earlier companies, Citation Resources, optioned that area and drilled some holes in around 1997-98, but didn't really find anything and sort of gave up and spent the next decade or so in Argentina exploring in that area. But around 2010 or so, there was a very thick compendium about the Sullivan deposit published, and John and Gordon, probably the only people on this planet who got this thing and made it their bed night reading, completely rethinking what made Sullivan 1 tick. And that brought them back to the Monroe area. And in 2016, they started a series of drill programs, small ones. The target is deep in this area. They've drilled 8 holes. And the last one, drilled in May of this year, finally gave them the clue as to where in this area there is a big system. And several weeks ago, they started a second drill program this year, 2 holes, each expected to be 1,200 meters because they believe the target is between 1,000 and 1,200 meters deep. So for a total program of $2,400, it was financed through a private placement in the sort of 38 cent range, taken down mostly by long-term backers. Everybody else has pretty much given up. I'd given up myself, but when John Leask said, "This is it. If it is not here, we might as well pack it in." And what they have realized is that there is a sub-basin trending north-south within the overall Monroe sub-basin. And the hole that they drilled, one they drilled last year, nicked a sort of a horizon of that sort of tourmaline mineralization that's got lead zinc in it. Not a huge amount, but it's what you might find peripheral to a Sullivan-type system. And the other hole, the hole 8, number 8 that they drilled this year, they ended up stopping it in albite. And what they're always looking for in this part of southeastern BC is the sequence of albitization, which is a later stage form of alteration when the fluids are no longer metal enriched. Then a nice massive sulfide pie of lead zinc mineralization, followed by the tourmaline, which is another form of alteration, which is a pre-mineral alteration, though it will have mineralization in it because it becomes the feeder system through which the smoker system spews the metal-enriched goodies onto the sea floor. And they think that the hole that they drilled last in 2017 just stopped short of crossing over into the what they call a third order sub-basin. And this hole that they're drilling now is targeting what would be a down-dropped continuation of what they hit in that hole higher up. And so this is going to go right into the heart of the Monroe area. And if they hit, well, I don't think they have a footprint as big as Sullivan itself. The down-dropped system suggests a footprint of only 60 million tons. But that in itself, I've modeled it on those similar grades as Sullivan using the Share Collective's outcome visualization tool. And that itself, at today's lead zinc prices and using costs similar to what Arizona Mining Inc. used for its Hermosa Taylor discovery, that comes up with a $1.9 billion NPV. And of course, that's not what it deserves to be worth today, but that's what it would be worth if you fully delineate it. And in fact, South 32 did pay 2.1 billion Canadian for this to acquire Arizona Mining Inc. and its Hermosa Taylor project. So we have a recent analog. We have a context where similar world-class type of deposit is capable in this part of British Columbia. We call it Sullivan 2. And they've set up this drill program. They think if there aren't any problems with drilling, they should hit target depth within 2 weeks. They would be able to see from the visuals whether they have a sort of 10-meter plus intersection of sphalerite and galena with similar textures to what you expect from a SEDEX deposit. And you will probably see the online map staking system in British Columbia light up as Highway 50, before it tells anybody what they've seen, goes in there and beefs up their land position in southeastern British Columbia. And the company only has about 42 million shares out. They do have can earn only 50% from the Leask brothers themselves, so they will have to resolve this issue of how to put 100% into the company. Highway 50 still has to spend $1.5 million or so to get to that 50%, so they'll be able to drill some more holes. The main risk with this sniper kill shot is that the hole undergoes deviation and doesn't stay within that sub-basin and hit the the target depth ends up going back out, then they would have to drill that second hole. That would be sort of the second shot at nailing the elephant. And the upside potential for a company like this with not that much stock out is quite substantial, because if you get a discovery in the geological context like this, then you get the S-curve activity. And a stock like this could go to end up being worth $28 down the road. Now, obviously, it's not going to go there right away, but the fair value range right now is sort of 28 cents to 46 cents, where it is sitting there waiting for confirmation that this isn't just another duster. And I published a write-up last night sort of explaining the context, what we can expect if we get a hit, and the stock has traded all of 1,000 shares today. The market is very reluctant to act ahead of a sniper kill shot, because sniper kill shots normally miss in the resource exploration sector. Once in a while, such as with Aurelian and the Fruta del Norte target, they connect. But that was after the company had already spent $19 million in Ecuador before somebody said, let's test this theory here and drill this deep hole through all this cover and see if we get something. So if we do have a discovery of something that's maybe a smaller version of Sullivan 1, but still command a potential $2 billion valuation at the end of the day, this would really make this part of British Columbia come alive again. And there's two other companies that I'm watching. One is a spec value hunter recommendation, Eagle Plains, which has the Iron Range project, which we talked about earlier this year, where they drilled a Talon target. The IP anomaly ended up being explained by just pyrrhotite and pyrite, iron sulfides, not the other sulfides that they were looking for. But this is another Graben-style setting, similar to the Monroe and the Sullivan Graben itself. Eagle Plains owns most of it. Nobody cares right now. It has both IOCG and SEDEX potential. But there's a company that would respond in the market if suddenly the cluster theory is confirmed by the discovery of Sullivan 2, because then obviously everybody's going to think, well, if this isn't just the one freak, why should it be stopped at 2? Why not there be 3? And the other company that stands to benefit is PJX Resources, which owns the Vine target, and they've been drilling in that area, trying to find a more substantial SEDEX-style deposit in that area. And they also have a series of projects. One of them is farmed out to Tech Cominco, which is drilling it, or close to drilling, has a permit. It's called the DD project. They have a 75% option. It sort of is just north of the Moyi Fault, which is this northeast trending fault, south of which everything has been dropped down hopelessly deep. So if anything's there, forget about finding it. But the DD project is about 10 kilometers or so to the southwest, and they have a magneto telluride target in what they think is the Sullivan time horizon depth. So there's a drill program going on there. If there's joy coming out of that, that would also kickstart the area, be good for Eagle Plains, even if poor Highway 50 manages to come up empty with its hypothesis. But if Highway 50 does deliver a reasonable thickness of massive sulfide lead zinc mineralization, you would expect PGX Resources to suddenly become much more interesting to the market. And I would expect Eagle Plains, and this is their backyard, to also come alive. So you can either try to buy Highway 50 now in a fairly illiquid market, or you can go and pick a company like Eagle Plains, which has lots of other things going on, which is not going to go down if the Monroe kill shot misses.
We'll have more Discovery Watch with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Welcome back to Discovery Watch with John Kaiser. John, Renaissance Gold and partner S2 Resources are also planning a deep drilling program at their Ecru project in Nevada. What is the size of the prize that they're going after?
Jim, I think the size of the prize is a Cortez Hills underground equivalent, 10 million tons of 20-gram gold, which using sort of Barrick's modeled or Barrick's actual operating cost, when I model that on the share collective, I come up with a $1.9 billion U.S. NPV outcome, which is about 2.4 billion Canadian. So it is a substantial prize. I used the same sort of prize last week when I talked about Nevada Exploration Inc. and its drilling strategy at the South Grass Valley project. In Nevada, you basically come up with your analog, similar to what I did in the earlier segment today when I talked about Sullivan. Well, what if you find something that's like Sullivan, maybe a smaller version of it? What would be worth? In discovery exploration, you get quite low valuations fairly early in the game, especially in this bear market that we have now, where everybody imagines everything is going to end up worth nothing. And even if you have something that looks interesting, well, we all know we're going into a global depression and metal prices are going to go into the tank. And so even though it starts out worth an awful lot, it will end up very negative. In this type of gloomy climate, this is when you see big discoveries emerge. I talked to Bob Felder the other day, and he says, well, they had hoped they would be drilling by now. However, because they did this lease deal with Newmont, there are some additional hoops to jump through. So they think that within 1 to 2 weeks, they will start drilling. Now, S2 Resources is an Australian company with about 250 million shares out, which is several times more than what Renaissance Gold has. Renaissance Gold has several $1 million in working capital. They did a big cheap financing earlier this year to keep the lights on, and they are a prospect generator specialized in Nevada, and they farmed out this project 70% to S2 Resources, which has a $20 to $25 million treasury as a result of selling all their other assets, and they're now focused on Finland and increasingly Nevada. This is a Mark Bennett, Mark Creasy company, and they are in swing for the fences mode. The target is about 5 to 8 kilometers north of the Pipeline deposit. It's on the western flank of Crescent Valley. Crescent Valley itself is extraordinarily deep when you get down to the bedrock. Barrick a few years ago attempted some very deep drilling in the middle of the valley, but apparently did not have any success. Cortez Hills is across the valley from Pipeline, and it is substantial, and you go farther south and you have the 15 million ounce Gold Rush deposit, which as they chase that farther north, they've come up with the 4 mile acres high grade underground target. What Bob Felder and his team at Renaissance believe is that there's a structural control across the valley that crosses through the area of the Ecru claims. They think the upper plate, lower plate contact is about maybe at most 1,000 meters deep in this area. The Carlin type gold system is going to be best in the carbonate rocks, the lower plate carbonate rocks. And so this is a blind drilling program based on a lot of regional structural analysis suggesting that everything comes together in this location. It does, as a virtue, have the proximity to the pipeline system, and the whole sort of 1,000 meters deep, maybe less if they're fortunate. It's all going to be about geological context. It would be way too much to expect them to spear high-grade gold mineralization, but if they demonstrate that there is alteration going on here, then the stuff I talked about last week with Nevada Exploration Inc., where you start looking at what are the pathfinders, the Carlin pathfinders, how are they grading, how are they zoning, are we within a system, how do we start vectoring? And although it'll only take $3 million for S2 to vest for 70%, it itself does have a very ample treasury, so that if they just realize that they are into a Carlin-type system at Ecru, they will be able to carry on. And of course, Renaissance Gold has the backing of Rick Rule and John Tocnetti, so there will be plenty of support for Renaissance Gold to provide its 30% share. And this, in fact, happened with the predecessor, OX Resources. It was partners, minority partners with Frontier Gold on the Long Canyon project, and they almost got squeezed out, but the backer stepped up and wrote big checks to keep them in the game, and it turned out in the end a $2.3 billion windfall for the combined company when Frontier Gold capitulated and absorbed OX Ventures, and of course Renaissance Gold was the spin-out. So high stakes holes, the potential to light up this part of Nevada, and S2 Resources, if you want the numbers, S2 could go to sort of $9 or $6 Australian based on its capitalization and ownership, and Renaissance Gold could hit $9 based on its capitalization and net interest. But the range that we're in now, S2 Resources is smack in the fair value range. It's trading at 10 cents, and Renaissance Gold, because it's a prospect generator, and ends up being probably more fairly valued than a company that doesn't have that many other projects in its portfolio. It's in the upper part of its fair value range, but both of them should actually be trading higher if we were in a normal market and the market was willing to start putting some of the early parts of the S-curve anticipation into the pricing of the company. If we do get confirmation that they are into a system, then of course we go into discovery delineation mode, and then you have valuations that can be all over the map, because you just don't know how big a new Carlin-type system in the backyard of a very substantial and valuable Carlin-type system could end up becoming. And that's the definition of S-curve speculation. You don't know how big it can get until you do.
We'll have more with John Kaiser right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with John Kaiser. John, JT Gold announced additional results for the Saddle North discovery at Tatoga, and the stock is up substantially. What's the good news?
The good news is that the the second and third hole after the big one that got everything going a month or so ago, this continues to confirm that Saddle North is a substantial, significant copper, gold, silver, porphyry discovery, very similar to the Red Chris deposit, which is in the neighborhood and which is currently in production. The hole 93 yielded from surface to bottom 904 meters of half a gram gold, 0.3% copper, and 0.93 gram per ton silver. And that's roughly at current metal prices, that's almost 1 gram per ton gold. And 1 gram per ton gold deposits equivalent that can be open pittable. Those are significant discoveries. The grade is improving with depth, which is what seems to be the case with these calc-alkaline systems such as Red Chris, whose best part is not even going to be mined in this particular mine life for that operation. The company did close its private placements that it announced when that first hole was published. It's between sort of 67 cents and 95 cents, with the 95 cents for those charity flow-through stock that was issued. So they've got enough money to carry on. They've got about 5 more holes pending. An important observation made in the press release that came out this morning is that these holes have strong visuals. And what these results today are confirming is that they have a very good handle on assessing when they are into good mineralization and not. And I think the reason the stock jumped over 30 cents today, over $1, and has traded when I last looked 13 million shares this morning, is because the market is now shifting into number crunching mode, and we can start putting together an imaginary deposit, and we can start mapping costs of borrowing them from the Red Chris deposit. And hopefully by next week I'll have an outcome visualization done on the Share Collective where we can see what the size of this prize is shaping up based on the reported intersections of mineralization and the sort of grades that we're starting to see come out of this system.
John, thanks a lot for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howestreet.com. Discovery Watch is a production of Howe Street Media Incorporated.